Yo, what's up traders? Welcome to a new video. In this video, I will show you a powerful 1-minute scalping strategy and I'm going to test it 150 times for you. Well, let's jump right into it. By the way, comment I subscribe so I know exactly who my subscribers are. Okay, this is the strategy. I will briefly go over it and then I will test it 150 times. Over here we see the exponential moving average and we see another exponential moving average. How do you get these indicators? We're looking for exponential moving average and this is the one that I choose, exponential moving average set of 3 by FS Crypt. Why? Because you will get you get 4 exponential moving averages it just takes a place of 1 indicator, right? If you're using the free version of TradingView, you're able to use up to 3 indicators. Now we can get 4 exponential moving averages and we only use 1 indicator, if you know what I mean. So we click once, then we are looking for a divergence indicator over here. We also click once on that, and last but not least the stochastic. Over here we see the stochastic and we click on it as well. And then of course the exponential moving averages over here. This is the 50 exponential moving average and this is the 200. So as you can see, the 20, 50, 100 and 200, the second one is the 50 and the last one is the 200. And of course you can just play around with the colors. I choose red and gray. Okay, and then we are looking at the divergence indicator, and what is important is to select the plot hidden bullish and the plot hidden bearish. So in my previous video I forgot to enable the hidden bullish divergence and the hidden bearish divergence indicators. It only showed regular divergence signals, and for this strategy we're only focusing on hidden bullish and hidden bearish. So make sure to enable these 2 indicators, and of course you can play around with the colors, but that's not really that important. And then we are looking at the stochastic and I set it to 533. Alright, now I will show you a sell opportunity. We're only taking sell orders when the 50 exponential moving average is below the 200 exponential moving average. And of course I almost forgot to mention it, we're looking at the 1 minute. The time frame is the 1 minute time frame. Okay, the 50 needs to be below the 200. That means that the trend is bearish. We're only looking for sell opportunities. Next, we look for hidden divergence. So as you can see, it shows a H bear and also a red color. So when this signal appears, we will take a sell order, right? But we only enter because this is a nice confirmation, but it's not the only confirmation we're looking for. We only take an entry when the stochastic makes a crossover. So when in this case the red line crosses the blue line, right, to the downside. In this case over here we have a H bear about here. It means that there's a hidden divergence. For the people that do not know what hidden divergence means, it basically means that we have a high and we have another high over here, but this high is lower than this high, and when we're looking at the indicator we see that this high is higher than this high, right? Again, this high is higher than this high over here, but the indicator shows that this high is higher than this high. So yeah, we're talking about divergence. What I also would like to mention is that the indicator lags a little bit, which could result in missed moves. That's why I'm still advocating to train your eyes to see hidden divergence yourself. That means that your entries are much faster. Let me show you an example. So over here we have a high, right? Over here we have another high. When we look at the indicator, we see a high and we also see another high. But this high is higher than this high, and this high is higher than this high. So over here we also have a hidden bearish divergence. But as you can see, the indicator doesn't show a signal, right? Which means that you would not have taken this trade while it was apparently a nice winner. That's why I recommend you to train yourself, to educate yourself, and just keep backtesting how hidden divergence works. Because the indicator lags a little bit, we also receive delayed signals to enter. You will see a signal about here, and then you need to wait for the crossover, right, on a stochastic, and then of course we take the trade, and in this case it was a winner. But it could happen that it shows hidden bearish divergence in this case a little bit too late, and then you might end up entering too late. As you can see, this is a nice example. Over here we see that there's divergence. This is higher than this, while this is higher than this high. So we take a sell order, but only when the stochastic crossed to the downside. So over here we see a nice cross and we take the trade. This is a 1-to-2 risk reward ratio, and as you can see, it turned out to be a nice winner. I go back in time with the replay function to show you exactly over here, to show you exactly what I mean. So now we do not see any indications, right? No H bear signal. Okay, over here then we see about here, in my opinion. Now we need to look for a hidden divergence, because this is higher, this high is higher than this high. Over here we see a red bearish candle, but over here we see that the divergence, we see that the RSI indicator is higher. This level is higher than this level, right? So we're talking about divergence, especially when you see this candle close. Then you really need to think about a divergence situation. And when we see a crossover on the stochastic, then you could have taken this trade. We put the stop loss above the previous high, and then of course about here, this is a nice, about here too. And then I click on play, and now we see the H bear signal, the hidden bearish divergence signal, but now it's too late. And that is what I mean with train yourself to see hidden bearish divergence situations, so you can enter the trade way faster, because now we have to wait on the stochastic crossover, which happens about here, and then we enter the trade, and we see, of course, like I showed previously, that it turned out to be a winner as well. So this is you really have to take in mind to train yourself, to educate yourself on seeing hidden bearish or bullish divergence situations. Let me show you a buy opportunity as well. This is a nice buy opportunity. Over here we see this is a low, right? And we also see a low on the indicator, and then it says over here that there's another low, but this low over here is higher than this low. It's not a lot, but it's still higher, right? Which means that we're talking about a hidden divergence signal. Then of course we need to wait for the crossover to happen on the stochastic, which is about here. Then we take a buy trade, and I always place my stop loss below the previous low, in this case about here, a few pips. Or if you're trading on a 1 minute, you use a really small stop loss, and then you would have made money in a few minutes. And then we use a 2-to-1 risk reward ratio, which means that we're risking 1% and we would like to make 2%, and this turned out to be a winner. Now I will show you the last example. This is a low over here. We see another low about here, and this low is lower than this low. Over here we see that this low is lower than this low. So yeah, we're talking about a divergence situation. Of course we look at the crossover on a stochastic, which is about here, and then we take the trade. We place our stop loss below the low, right below this low over here, and you can also choose to place the stop loss below the 50 exponential moving average. We use a 2-to-1 risk reward ratio, which is about here, and this turned out to be a winner. Alright, let me test this strategy, this powerful 1 minute scalping strategy 150 times. I will pause this video and come back to you when I'm done. Alright, the results are in. We tested on the Euro USD, but I have to say that you can also use this if you are trading crypto. But yeah, I tested this on a Euro USD instrument. I risk 1% to make 2%, and I've tested the strategy on the 1 minute time frame. I took 150 trades, and the winning percentage is 53%. It took me 17 days, and we had 8 wins in a row, but also 7 losses in a row. And I risked 1% per trade, and the total gain on my account was 55%, which means that this trading strategy is profitable. And I have to say that of course we are looking at the 1 minute time frame, so you have to act quite fast, and you basically have 1 minute to execute this trade, because every candle is 1 minute. And you also have to take into account these fees, because every time you take a trade, you take an order, you have to pay commissions or spread. So yeah, because we're trading on the 1 minute time frame, we pay more fees, more spreads than when we're trading on the 1 hour time frame, because yeah, we are taking more trades. So yeah, I'm quite satisfied with these results, and it's, like I said, quite powerful, and it's not really hard to understand, I believe. Of course you have to figure out how divergence works, but after a few trades you get the hang of it and you see it quite fast. And yeah, divergence is a nice way of trading. Of course it's not always accurate, but you can definitely make some money using this strategy, also with the stochastic, and of course the exponential moving averages to identify the trend. If you want to see more videos about testing trading strategies, or forex trading or crypto trading, just give this video a thumbs up, subscribe, and also let me know down below in the comments which trading strategy you also would like to see tested. I see you in the next video.